What's up, guys? Welcome back to the channel. Now, guys, if you're new to the channel or if you've been getting a lot of good information, leave me a like. That helps me out a ton, especially if you would like to join a Discord. I do have a Discord. The link is in the description of the video, but we are going to go over a couple things that I think that you should actually, this is pretty much a good chance to learn. You don't get this opportunity a lot, especially in when bull trends, change into bear trends. Now, when you do change into a bull to a bear or a bull to a bear trend, you do get a lot of pullbacks where it fools a lot of people. You can actually see it right here. Let me actually find it for you because I actually was watching this. It spiked super hard around close. You saw that jump. That was a lot of people getting into a lot of calls and stuff like that because, a lot of people don't do TA. They just go off of Facebook posts and stuff. Where is it? It's PCC. So if you actually look at this, so this is the puts to call ratio, and you can tell right at close, look at all of these calls that jumped in at the last minute. Now, if you are a old trader, you know this is very bearish. When you get a lot of calls, it is bearish. The market's going to work its ways. Or if it's a bear thing, like, let's just say like this. So if you get a really hard push like this and put some calls, especially puts, the market's not going to want to pay that out. Usually you'll see the market do some weird stuff, shut down, SQQQ last week. But yeah, what I'm saying is the market doesn't like to put out, but we got a lot of calls in the system, and that is not good for the bulls. That is actually bearish. So what I do want to point out this video, because if you're a charter, or you could use price action, there's actually two ways to look at this if you really want to look at it in two ways. My favorite way is when a bull channel breaks, or a trend, whichever one you want to call it. Usually, I talk about it once in a while actually too. You will always see something like this where it will break the trend and then come right back up and hit that old support. That old support will come as a resistance. It is a very, very common thing. Now, if you are not looking at it that way, I guarantee a lot of people are doing this, where it's saying, oh, we're making lower highs, it's going to reject off of support, we're going to go lower, whichever one you want to work. All the indexes are doing this right now. But the biggest thing I really want to go over, since it is Sunday, is the puts. Say if you are deciding to short, I'm mostly going to do shorts because there's nothing really above. I mean, if you want to do calls, that's great, but I know this is going to probably reject most likely 95%, not financial advice, but there is ways to see where you should short. Now, when I'm reading these levels, I'm going to go over it, and if I'm reading past a level, or say if I say, hey, this is probably going to hit the 50-moving average, you should not be buying puts or shorting past the 50-moving average, because if you go look, if I say, hey, the sp500, let's just use this as a demonstration. Let's say, hey, the sp500 is probably going to find support around 6,600, and if you go look, there's a reason why past that level they're cheaper by a lot, because that is a unrealistic move in 1 or 2 or 3 weeks. Play with your moving averages. It is not that hard if you are shorting, especially just doing calls. Right now, the bears are winning right now because you can see, as if you don't know, especially if you're new to the channel, if you don't understand moving averages, it's not just supports and resistances. The 10 moving average, which is a really good symbol right here, when the 10 moving average gets above the 20 moving average, that means bulls are in control. When you get a cross, and it is verified, not a cross day one, because you can get intertwines, when it is verified and there is a gap, when the 10 moving average is below the 20 moving average, that means the bears are in control. So just pointing that out, you'll see it all in the Mega 7. So let's go over the levels really quick. I'm going to start off with the indexes because I kind of want to show you the dynamic of this right here, where it is hitting the bottom of the support. So if we actually do reject, you can pick one of these moving averages. You don't have to pick the moving average I call out. The moving average I am calling out is probably going to be where it's going to reject and find the lowest point in a short time frame where you're probably going to be playing. So if this does reject, you will look at support around 6,600. If you're buying call or puts past that, just stop playing. On the Nasdaq 100, you can see right here also, it is hitting the bottom of support. If this does reject, you do have a low of around 24,300. On the NAS 100 or the NAS, sorry, if the NAS does reject off of this old support because it's hitting pretty much a resistance, you are going to find a low of around 24,450. On the triple Qs, it is doing the exact same thing. And by the way, if you're new to the channel, all of these stocks are in every single index. So all the moving averages are going to be the same. So on the triple Qs, if it does reject at this level, you are looking at a low of around 590. Here's the thing too. Also, I'm going to throw this out. If there is a chance, well, it is going to happen. Sorry, not a chance, of around 544, 445. That's going to take a minute. So just keep an eye on that. If the market does, all the indexes do break their 100 moving average, you will start making your drop to around the 200 moving average around 544. Why would that happen? Well, when I go through the Mega 7, you're going to see a lot of them already breaking their 100 moving average and heading down to the 100 or the 200 moving average. That's a dead giveaway that it's coming. So on the Dow also, I don't really have the Dow channel up. I guess I could draw it really quick. Yeah, I don't really trade the Dow. I'm not really a big fan of it. Let's just say it goes up to here. Same channel, same thing as the other indexes. You're going to see a rejection off of this. Oh my gosh, it's breaking out. We're going higher. No, Jimmy. No, Jimmy. Stop, Jimmy. But if we do have support, you are going to look at a low of around 46,000. There is a chance of 44,000. On SPY, SPY is doing a little bit of a breakout because you can mostly just go ahead and blame Apple for that. But it's still doing lower highs. If you want to, just go ahead and pull that out. But we do have a low of around 654. Well, the 200 moving average will come into play very soon, around 613, maybe within a month. That doesn't mean by day, shorts. Just throwing that out there. So let's actually go over the Mega 7 channels because I do want to point these out. The three biggest stocks right now that are pushing the market, that's where we got this little bit of a push, is AVGO, Google, and Apple. If these stocks, when these stocks do, because they are going to reject, happens every time. I actually do need to update this channel, sorry about that. But if this does reject, which it's going to, and starts pushing to its moving averages, these are going to be a little bit higher because they're coming from a high than already breaking these moving averages. So you are going to find a lot of support around 360 on AVGO. On Google, I would not be surprised if it does tap the 20 moving average. It's probably going to break that 10 moving average really easily. So you're probably going to find support around 293 when it does reject. On Apple, I could see it pushing down to the 50 moving average of around 262. And then also on Meta. Here's the thing with Meta. All of the moving averages have been broken pretty much. Now, there is not a cross coming in. This is probably going to intertwine. You might find support around the 10 moving average around 609. That's probably where I would play, but there is a chance where the 433 is going to come, not tomorrow, not next week, not in 2 or 3 weeks, but probably within a month or two. You will see this probably break into the lower channels. So just throwing that out there if you're trying to buy calls in that. On Amazon is probably going to find support on the bull channel. It's been going in 2023 around this 200 moving average. Once again, what I just say, the 200 moving average, because a lot of them are already dropping to their 200 moving average, which that means the indexes are probably going to drop down to the 200 moving average when AVGO, Google, and Apple actually do break their 10 and 20 moving average. So you will find support around 214 on Amazon. On Tesla, it probably will hit the 100 moving average once again around 387 or 385, whichever you want to call that. On nvda, if you are trying to short nvda, it is a clear shot to the 200 moving average. Now, you're really going to have to be very careful with this because what I'm going to tell you right now, you need to pay attention to. If this is going to drop down to the 200 moving average, that means a lot of the Mega 7 are still going to have to break their moving averages and keep on pushing. So if you see a lot of the moving averages getting hit on the other Mega 7 and say this is only like halfway down, right? If you see a lot of support on the other Mega 7, this can have a chance to come back up and hit that 10 moving average and then start rejecting again. So don't think it's going to be a clear shot down to the 200 moving average. You really need to pay attention to the other 40% of the market because all of these stocks don't move together or don't move alone. They all move together. On AMD is hitting that 100 moving average. If the market decides to keep on pushing, which it's going to, say down to its 100 moving average on the triple Qs of 585, you will most likely see this 100 moving average get broken and probably start making its way down to around 150. Same thing on AMD though with nvda. Microsoft. Microsoft did hit its 200 moving average. It is at a high rejection zone, super high, since everyone's making a top in the three stocks of AVGO, Google, and Apple. And then you have a lot of the other Mega 7 about to reject also. You will probably see this probably make its way down to around 445 very soon. And what I am talking about is I'm talking about this 2023 bull channel. There is a chance of 400. That's probably not going to come in play right off the bat, but in the long run, yes. But you will probably see around 450 probably come into play on Microsoft. And just remember, guys, all of these Mega 7 are in every single index in a percentage wise. This percentage is market cap. No other YouTuber is going to break it down like this. I'm telling you. Now, if you are trading crude oil, I do want to give you a warning also. Let's actually bring it up. Or did it reject? It did reject off that 20 moving average right at close. But on a good note, it is making higher highs. So just be very careful with crude oil. It can bounce here. This is a very solid level. Really, if you are in oil stocks and you're worried about, because if you don't know, the crude oil price controls your oil stocks, just like how the Mega 7 control the indexes. Now, this is a very solid level around crude oil. So if you are trading crude oil, you really need to pay attention to these moving averages, because these are like walls pretty much. The bears are still in control on crude oil. Let's actually go to the 4-hour chart. So the bears are still in control. Now, when you want to see this really pop, you really need to see this 10 moving average get above that 20 moving average, and you might start seeing crude oil start to pump to around 62 on crude oil. What that is, if you want to know what that does to your oil stocks, go look at their 100 moving average. This 100 moving average on crude oil, go look at your 100 moving average on your oil stock. That's most likely where it's going to end if crude oil decides to push to around 62, which it's not really hard to push to 62. I'm just saying. A lot of people are really just brainwashed by this little low. I mean, I would too. I'm not going to lie. Like crude oil has been really toxic, and it's mostly due to the triple Qs pushing. If you are a new viewer, I'll just break it down really quick. This really big drop in crude oil is really coming from the triple Qs just straight pushing up from an insanely amount. Now you can kind of see how what I'm talking about is you can see how the triple Qs made a really hard push. Now, what a coincidence, it made it at around the same date, this really long drop. So in order to get a really hard push in crude oil, you're going to need the triple Qs to make a drop. It is very basic. It's one of the first things I've learned in trading. A lot of other YouTubers aren't going to tell you this. They're just going to feed you fear, or they're just going to go to Google and type in, well, Iran did this, and Iraq did this, and Russia did. No. Unless if a war breaks out and they put a stop on crude oil, or if Iran decides to choke the channel, if you know what I'm talking about, the little strip where they can meet, like where there's like only a couple miles apart. If they choke that, yes, crude oil can jump. But no, Iran doesn't sell, or Russia and Iran don't really sell oil to us. They just probably sell their excess. A lot of it goes to China. They're not going to push it through the ocean. They're just going to sell it through their borders. It's really a big propaganda what America does, saying, well, I ran this, I ran that. Guys, Iran really doesn't care about us. They sell all their oil to China. We're not really going to choke off their oil. And Russia too. We're never going to choke their oil. It's going to go to China always. So just be very careful. Let's see, is there anything else I need to go over? That's pretty much it. It's Sunday fun day, so don't get too drunk today. Go to your job tomorrow and don't get fired. Yeah, trading is not just. And by the way, if you're young and you think trading is the key to being a free life, you really need to have multiple incomes in life to be rich. Just saying.